Best ever listeners, welcome to the best real estate investing advice ever show. I'm Ash Patel and I'm with today's guest, Mike Stohler. Mike is joining us from Scottsdale, Arizona. He is the managing partner at Gateway Private Equity, which creates and manages income producing hotel real estate investment portfolios for investors. Mike's portfolio consists of 8 single family rentals and 3 hotels. Mike, thank you for joining us. And how are you today?
Oh, doing well. Thanks, Ash.
Hey, it's our pleasure to have you here today. Mike, before we get started, can you give the best ever listeners a little bit more about your background and what you're focused on now?
Yeah, it was funny. I started my first real estate adventure was some single family homes back in small town Indiana. I call it the PG days, pre-Google. So the greatest thing that you guys have now is all of this plethora of knowledge that people can grab a hold of. Back when I first started, I failed miserably, man. Buying homes was easy, but how do you become a landlord? How do you do leases? What are all these things? And what was I going to do? Thumb through the yellow pages and find the answers. So it was a very hard lesson learned.
You had encyclopedias back then too, right?
Encyclopedias and yellow pages. It's just like thumbing for the answers. That was all I could do. But I learned. I just knew that real estate was it. I took a break, become an airline pilot, just because that was my dream. And then when I started making more money, paid off the debt from failing miserably, I started getting back into it. And went from some more single families, 4-plexes, 8-plexes, 20-plexes, 50-plexes on up, just build up. I owned and managed about 1,400 doors, and then started selling those off whenever the cap rate started really coming down. And then I was like, well, what in the world should I do now? I don't want any more multifamily at 3 cap or 3.5 cap. So I, through networking, which everyone should do, and through mentoring, I found a guy that was into hotels. And then ever since 2017, we've been focused on hotels, and I love it.
1,400 doors, and you saw the cap rates going down. So you
Yeah,
saw them reversing. Sorry, you saw them
reversed.
going down.
Yep.
And you figured, hey, might as well cash out at this point.
Well, I bought at 8 to 10, back in the day. Made a lot of money during the last recession, in 7, 8, 9, when the commercial loans, everything kind of crashed in 7 and 8, but those commercial loans were starting to come due around 11, 12, because they're on 5-year balloons and things like that. And there was 100% occupied complexes that made money, but because they didn't value, the banks wouldn't loan them, refinance them. So I came in and bam, started picking things up. And then when the cap rate started getting down to like the 3s, the 4s, I started selling them off. But then I was like, I don't want to buy anything at 3 and 4. So I made the switch. Hotels again were 8 to 10, plus. So if you did a cap rates, we really don't do cap rates in hotels, but if you did, it'd be like 8 to 10.
Mike, you're very opportunistic, and I love that. Did you buy these multifamily properties from the bank or a court receiver?
Yeah, great question. Yes, and others were seller financing, and some were where I just picked up the note. I said, hey, you're 3 months behind, and I'll pay that 3 months, and I'm just going to take over your loan for you. I did that on some smaller ones, seller financing on some of the bigger ones, because I was like, look, you're not going to be able to refi. The bank's going to grab this. I'll just start paying your mortgage as it is, and I'll be able to come in with the money, the extra money down, because now they're valuating at 60% instead of 80%. They didn't have that difference. I'd come in with the difference and just buy it that way, just negotiating with the banks.
Mike, did you get into hotels during COVID or before?
It was before.
Okay.
Yeah, yeah. I had, if you listeners, I don't know if this is video. I had hair prior to COVID. But I'm just
Well, so Mike, hotels were not in distress before COVID, right?
correct.
Why were you attracted to buying hotels?
I like the business aspect of hotels. Multifamily, once you get into a lot of doors, it's kind of funny. It's not that I started hating people, you know, as all landlords sit there and just wrap your heads around, oh my God, why do I have to put up with tenants, again? Um, but I really like the business aspect of hotels, and I love the fact that I can change my, in quotes, rent every day instead of being locked 6 months or locked a year. I get to change every day. I get to pay people to work for me, so I get the satisfaction of creating income and the paycheck for my employees. I like the fact that the government and the states consider the hotels a business instead of real estate. So there's just a lot of things I like about the hotels. And I like the fact that I do franchise hotels. So I like that I can just put up a Hilton sign or put up a, Wingate sign and pay them a small fee, but they bring in everyone, that stays. I don't have to do any advertising or marketing.
How did so you listed a lot of positives about the hotel business. What about numbers, the returns pre-COVID? Were the returns much higher than multifamily or other real
Yes.
estate assets?
Yes.
Okay.
So pre-COVID, if you take let's say 100-key hotel and 100-unit multifamily, $1,000. I don't have a calculator. Let's say it's $1,000 a month, 100 units. You're getting X amount per year, and it's stationary. That's just what you're going to get. My gross is so much more because one day it'll be $80 a night, but then something comes up and it's $250 a night. So I've taken 100 instead of 100 yearly leases. I'm doing 100 times 12 months times 4 weeks, every day. So let's say I stay at 80% and you're at 80% with the multifamily. My gross is just so much more. Granted, I have more expenses. I have vendors. I have, breakfast and Wi-Fi and all that sort of stuff. But the cash at the end of it is higher on hotels, and the appreciation back then was really good because you could buy hotels, the land that sat on the hotels, that the hotel set on, where they appreciated a lot more because I could get them in tech parks. I could get in some really high valued land. So that was another thing that was also going up, the appreciation. So when we started selling some hotels, it was just unbelievable, the appreciation.
Basically, you were the original short-term rental before that phrase was coined with short-term rentals, right?
That's true. And I love the fact that, hey, and I like what's called limited service hotels. I do kind of a higher end limited service. That means, hey, I give you free breakfast, free Wi-Fi, and get out. Okay, you're not going to stay usually for a week or two. It's not a resort, so I don't have to deal with a lot of things. I don't have conference rooms. I don't have restaurants.
What about a pool and a gym?
Yep, yeah, we have a pool. We have gyms, 24-hour fitness. We have the little snack shops, marketplaces, things like that. But it's geared towards, you're coming in for a couple of nights, and that's why we don't have any. We don't compete with the Airbnbs. I get that question a lot. We deal more with some work people that coming in for a couple of days. You're not going to, if you have 2 or 3 gentlemen, couple ladies, you're not going to rent an Airbnb. Okay, that's just like so many wrong things with business, in the corporate world.
That's
So you're
how
going to
rumors
stay.
get started.
That's how rumors get started. So you're going to stay in our hotels.
Yes. Funny you mentioned that. We were traveling, looking at some property in northern Indiana. By the way, where was it in Indiana that you were?
Yeah, it's the Anderson Pendleton area.
Sure. Yeah. I went to
Uh,
IU, Indiana
hey,
University.
I'm a fellow Hoosier.
Awesome. So we went to Merrillville and Valpo, Indiana to look at
Sure, I know
property.
that. Yeah.
And it was three of us. And, we all get along very well. So I thought it'd be fun to get an Airbnb. Just couldn't find anything. But you're right. If there was females along, if my assistant was with us,
Yeah.
it's not an option, right? It's you got to
It's
stay in a
not an
hotel.
option because even if something didn't happen, you make someone upset 3 months down the road and all of a sudden something could happen.
Yeah, no, I get that.
And then you have to prove that something didn't.
Yeah. Mike, how did the hotels fare during COVID and where are they?
Mm-hmm. Yeah. Arizona, one in Georgia, and we're getting ready to do some development in northern Arizona. Here's what I learned prior to COVID. I'd buy anywhere. During COVID, I really learned to look at different aspects. It's like which of the hotels did well and why did they do well. Some of our hotels did extremely well during COVID. Number one, they're in what I call now free states. I don't want to get into politics. It's a business decision, right? So don't take this as a political attack, but you have to now look at business. Um, Everyone knows hotels in California had to shut down for 6-7 months more. Banks gave them 3 or 4 months deferment. So that means they had 30, 40, $50,000 loans plus that they had to start paying, and they were not allowed to stay open. So thank God our hotels are in a number one tourist destination. A lot of people that were shut down went to Arizona, went to Georgia, went to Florida, went to Texas, went to what I called the free states where we were allowed to stay open as hotels. We were actually essential businesses. So those did really well. Truckers were essential during COVID. So our hotels that were along the major interstates that had truck driver parking did extremely well. The hotels that I thought would do very well, that did extremely well pre-COVID, stunk. They're the ones that were in high-tech business parks that rely on people coming to work, people visiting tech centers.
Interesting. And what states were those in? The ones
Arizona.
that did not do well. Okay.
Oh yeah, Arizona. Yeah, we have a very big tech area, like in Chandler. Yeah, Intel's there, microchips facilities, just a lot of manufacturing things, and it was empty. It was just, my gosh, that's when, as a hotelier, you have to think outside of the box. And we did day use rentals. Now all of a sudden you have to work at home. You have 3 kids, a stay-at-home spouse, and you are now at the kitchen table trying to do Zoom calls and get business. We're like going, hey, $50 a day, come to our hotel room, and you get the nice quiet office, free coffee, and that really helped. And another thing that really helped that hotel, those hotels, was because California was shut down. They couldn't even do outside sports, soccer, volleyball. They couldn't do anything. They shut the entire state down. So we had team clubs that were 4 miles apart in San Diego travel all the way to Arizona just to play each other and then go back. And I'm like going, oh, okay, thank you, California, because that kept us going.
I love the day use idea.
Mm-hmm.
I would even take it a step further. Hey, if you want a quiet night's sleep away
Mm-hmm.
from your family, might as well spend the night here too. Take
Absolutely.
turns with your spouse, right?
Yeah.
That's brilliant. Where did you get that idea from?
Well, it was just thinking outside the box, because some of the people that friends of mine that are in the 9 to 5ers that used to go to Industrious and Regis. They used to go to those little day use for meetings and for different calls. They were complaining that they couldn't go to those, that those were even shut down. So I'm thinking, well, wait a minute, I am a Regis, I am a Industrious, plus I have a shower, free coffee, so it's like, it just came to me. It's like, why would I not become the next day use office space?
Yeah, which also is a reason that small offices are on fire right now.
Hmm.
The large high-rise office buildings, I get they're struggling, but small 1, 2 person offices, very
Yep.
easy to rent for those reasons. Like you mentioned, kids are at home, spouses at home, the kitchen table can only serve so many cubicles, right?
That's
And
right.
really, when in the summertime, when the kids are off school, you got pets running around, is that a
Hmm.
conducive work environment?
Hmm.
So yeah, how did those hotels that were not in the hot spots, how did you dispose of them, or do you still have them, and if they recovered?
Yeah, we still have them, uh, and you know, thank God that none of our hotels um, had to close. We had got to one of them, we got down to 8% occupancy, and what we did is we became, instead of a 4-story hotel, we became a 2-story hotel. We just shut 2 stories down, turned off the air, turned off the everything, and just became a 20 unit hotel, or a 25 unit. Um, but they're doing well. And another thing, thank God, the states that they're in, it's just, we love the tourist type areas. The business one is starting to come back. There's been a lot of growth, a lot of construction. We're in a hot spot. We have some hotels, or a hotel that's in where electric vehicles are being manufactured. So there's just a lot of booming industry around there. So it's when I said earlier that we don't have to do any marketing or anything like that because we have franchises. That's a little misconception, because our GMs do go to the um, city councils and the chambers and trying to find out who's coming in, who's building this, so that we can kind of get in front of grabbing that labor. So that is something that has really helped us, is construction.
You're an opportunistic individual.
Hmm.
So there's still hotels that have not recovered.
Hmm.
Does something inside you want to chase those deals and buy them for pennies on the dollar?
Yeah, right now it's kind of funny. You have two sides. You have what the real numbers are saying, and then you have the owner that says, well, it could do this. The performance, it's in every industry, right? It's
Yeah.
in everything. So right now, there are some that are going to auction that I'd love to pick up, but um, the ones that aren't going to auction yet, I want this year's numbers, last year's numbers. The owners want to sell it based on 2018, 2019 numbers. With the economy going like it is now, you can't, a smart investor, and ladies and gentlemen, if you're listening, don't ever buy anything based on emotions. Oh my God, I would love to have this hotel or multifamily in this area. It's the perfect specimen. It's the perfect asset. If the numbers don't work, don't buy it, because I've learned a long time ago that I cannot speculate. Um, I don't know if the economy is going to recover to what it was 4 years ago, 3 years ago. So I can't buy something based on 2018, 2019 numbers, because I don't know when it'll get back to that. But yes, um, right now I'm in kind of looking at development, ground up, because I know that I can put in the technology where I don't have to worry about employees showing up, or if they want to work. It's another thing that we have to deal with. We had COVID, now we had the great resignation, and then now people don't want to work, and now people want um, $10 more an hour. So it's just over and over and over again. So I want to build some hotels where, look, I don't need a front desk. I have a little kiosk, I have a computer, the computer never sleeps, the computer never wants a raise. So we do that. So I like that. And they're going to be built, 2 to 3 years from now. And that's my speculation, I guess, is that I'm thinking that the economy will correct itself by then. So that's what we're focused on now.
And are the major flags, Hilton, Marriott's, are they going away from employees as well? Are they
Mhm.
enabling this technology?
They are, and that's a great question. The bigger ones are a little more on board. The Marriotts, the Hiltons, the Wyndhams, they like that. The smaller ones say, "Oh, we like the interaction. We want someone to say hi, how are you?" And they want the front desk, they want the concierge, they want all this stuff. Um, the trademarks, the autograph collections, which were kind of the higher end, and some of the things that we're looking at is what's called a trademark by Wyndham, which is their higher end boutique, but it's still limited service. It's going to be a bar, but there's not going to be a restaurant. It could be mixed use. Love the put up. Yeah, I could have a robot clean the room. My God, I'd do it, but it is what it is. But yes, to answer your question, the bigger brands embrace. If you walk into most Marriotts, you can check in via your phone. You can grab your key via your phone. You don't even need the front desk.
And Mike, can you still find deals on hotels in those touristy areas, or have they all readjusted to market?
They have not readjusted to market. Uh, it depends on what kind of loan the person had, the ownership. Uh, if they had just a regular loan, conventional loan, or an SBA loan, they're doing okay. Uh, if they had what's called a CMBS loan, which is very, very popular in the hotel space, a CMBS is basically it's a stock market fund that is your bank. And the stock market did not have any way of, you can't call up Wells Fargo, your stockbroker, and say, "Hey, I need a deferment on my loan." There's just no way of doing that. So they're the ones that really suffered. And it wasn't until it was too late did I think it was Trump in his last year, all of a sudden they figured out that, oh my God, there's these loans out there. And they said, well, you don't have to pay them, but you still had all of this money that accumulated and was drawing interest. So they're the ones they can't recover. They just don't know how to recover, and their assets not worth what it was 2018, so they can't refi for what their balance is. So they're the ones that are really that I can find deals.
Is there going to be a lot more pain coming in that sector based on the future outlook of loans coming
No,
due?
well, the pain is that the banks right now are starting to kind of pull back because of the economy and inflation. Multifamily, I don't know, what the bank, what their flavor is for that. But with hotels right now, if I wanted to get some new stuff, they're kind of pulling back a little bit because they just don't know if people are going to be traveling 6 months from now because of the inflation, the cost of gas, the cost of airfare, the cost of everything. Um, it's a little bit easier if you stay in um, Florida, Arizona, because I can prove that people are still traveling to Arizona, especially now that it's 70 degrees outside, and it's going to be pretty soon. It's going to be 20 and 30 degrees out in the Northeast.
Mike, with hotels, there's that dreaded PIP, the
Yeah,
property improvement plan, right?
yeah.
How big of a deal is that? And, you
Mhm.
know, for what I understand, they come up every 10 years or so, 5 to 10 years,
Yeah,
and
five.
you're overhauling the entire hotel. Artwork on the walls, towel bars, showers, vanities,
hmm
and it just drains all of your profits.
hmm
So, how big of a deal is that?
Yeah, the truth about PIPs is it's usually in stages. Um, every couple of years, I'm doing something. Could be sofas this year, the pull-out couches, and then it could be. It's always something. And what I do, it can be draining. For instance, um, Choice Hotels change what I have a quality in. They change what the queue looks like in the signage. It's just a little hash.
Oh no.
That's all they did. Instead of a little curly Q, it's a straight line. Nobody in the entire freaking world is going to ever notice, but I have to change everything. $60,000 just for the signage that I have to change because of the little Q's different, you know? So you just have that and you're just like, wow, that's just what you have to do in order to have a franchise, and you have to do it. There are some things that I fight back on and I just don't do it. Artwork, for one thing, it's like a lot of times they don't even notice,
Yeah,
the
generic one
police.
set of generic artwork for another.
Yeah,
Yeah,
it's, and you get, what you have to do is you have to know other type of vendors, because the franchises want you to use their approved vendors, and they more than likely get a cut from those vendors. So
yeah.
they want you to use, okay, you have to replace this X, Y, and Z, and you have to choose between these two vendors. Well, these two vendors know that they're the only ones in the world. So they get, it's like $45 a square foot for wallpaper, instead of $8. So I'm like going, and I force the waiver. I'm like, here's the one I'm going to buy. Here's the one you want me to buy. You tell me which one is the vendor approved, which one's not. And if they can't do it, I'm going with the cheaper one. And
Good. I like it. Are you building cheaper than you could buy right now? Because that's what's going on with multifamily, right? A lot
mhm,
of times, multifamily prices have gone through the roof,
mhm,
cap rates are so low, and
yep.
people realize they can make more money building. Are you going to end up making more money? And are you
Mhm,
buying at a comparable cost of what used
mhm.
hotels are going for?
Yeah, great question. And the answer is yes. And there's two different ways that we're actually looking at building hotels. When the lumber prices are now starting to come down a little bit. But another option that we have, which is really good, is building hotels out of steel instead of the lumber. The steel costs a little bit more, but you get a lot less insurance costs, a lot less, no maintenance. There's no termites, there's no fire. There's just a lot. Structurally, it'll last a lot longer. But yes, we can build. The highest cost right now is that we worry about. It's not necessarily the building part. It's finding the land, because land is expensive. Um,
What's
so
the minimum?
negotiating.
What's the minimum acreage you need for four-story
Mhm.
run-of-the-mill hotel?
Yeah, we like 2.5 acres minimum. We can do 1.8 to 2. If we stack it tall. More of the regulations are you have to have so many parking spots per keys. But uh, to get a nice sized pool, I like 2.5 acres.
And what kind of returns are you seeing? Cash on cash returns on hotel investments.
Prior to COVID, it was a lot higher. On the ones that we were talking about that are along the highways, have truck driver parking, we're seeing 10% plus. We're seeing it's really, really good. Um, the one that's in that business park is still struggling. We're still up 6 figures for the year, but it's where, um, do I need to keep saving a little bit because I don't know what it is, or do I do the disbursement to the investors? So that one is kind of, that's the one that that was lost a lot of money during COVID-19. We just burned through our reserves. Then all of a sudden it came back really well. We're able to save a lot, do some disbursements, and then wham, it was starting to cut again because of the businesses and corporates are starting to pull back on travel again, because just they can't afford to fly people out. And they're doing a lot more Zoom calls and things like that. So that one is it's we're still we're looking at probably like a 4 or 5% return on that one. And what we're hoping is, because now we're coming into the busy season, um, we'll probably hopefully make a little bit more than that.
And do you typically raise the entire down payment amount from investors?
Yes. Yes.
What type of returns do the investors see?
Um, well, in the ones that, not that business one.
Yeah, let's take the good ones.
So the good ones. What we do is like a 12 to 15% preferred return. And then what we try to do is, after that's done, then we do like an 80-20 split.
Where
80 to the investors,
okay.
20 to the general partners.
Why do you give such a high pref?
Well, so the high pref is the way that the syndications work. Let's say that I can give that 15%, and I do, and it's the hotels that I'm allowed to do that. I can do that. But then let's say I can only give a 10%. Well, it just rolls into the next disbursement. And I do it because the appreciation, so it hits so hard. So if I can't do it during the year, and there's some years like during COVID that I wasn't able to do it, then they still get it on the back end, and the appreciation of those assets, it's just so nice that they'll end up getting more than that. The overall return is like a 2.3 times, 2.3 to 2.5 times your initial investment.
Over
But
how many years?
hotels are a little bit longer, so we like to do like a 7-year. I can sell within 5. I can hold it for 10. We may have to hold 2 of them just because of COVID. But they're longer, because it's a business. I can't go in, put lipstick on it, and flip it. You have to sit there and see. With businesses are, it's an X amount times the gross. Okay, it's not. I don't sell it based on the cap rate. You look at this type of hotel in this type of an area in this zip code. A hotel sells for like 4.5 times gross. That's how you do businesses. You don't go buy a McDonald's based on a cap rate. It's an X times gross, and that's how hotels work.
Yeah. So Michael, what's a normal day look like for you? Because now you're running businesses.
Mm-hmm.
So what's a normal day?
Good question. A normal day is getting in touch with each hotel has a general manager, and then I have an area person that kind of oversees the GMs. I have a plan. I call it my default calendar, and I just go through and say, okay, this hotel, I'm going to look at what's coming up, what we have going on at that hotel. Am I doing a PIP? Am I doing some type of renovation? What kind of businesses are coming through? So I just kind of go through each hotel, and what is going on with each individual hotel, and I'll spend a couple hours on each hotel. And that's half the day. And then towards the end of the day, I look at the emails. And then a couple times a week, I have the actual meetings with the GMs or the area director. So it's just kind of making sure everything's rolling through. We have a bi-weekly revenue and sales and marketing with calls with the actual franchises. So for instance, right now, the Arizona hotels were prepping for the Super Bowl. It's coming up. And we always look at what kind of concerts, we're just kind of, that's kind of, we go through all that sort of stuff. Give me a reason why I can raise the rents, raise the bar. So that's a lot of it. And then it's putting out fires, um, making
Yeah,
the big decisions.
the usual of leading an organization.
Yeah.
Yeah.
Yeah. And it's some of it's big. It's like, one of the hotels, all of a sudden we had to put 6 rooms out of order because we don't know why something's really wrong with the plumbing. And so it's just dealing with stuff.
Yeah. Michael, what is your best real estate investing advice ever?
Find your why. Everybody, why are you doing this? Why do you want to do this? When I was young in my 20s, I wanted to make a lot of money. That was my why. That's the wrong why. The money will come. So my best advice is to find your why. And my why is I wanted to build a life that I didn't have to take a vacation from. I can do my business. I'm sitting in my cabin up in northern Arizona right now, and I can do my business. I can be on a yacht. I can be on a cruise ship, some RV. My vacations, I can do anything I want now, and that's my why. So my is why you want.
And you love what you do, which is why you do it.
Absolutely. I can't. My God, if I was in an office somewhere, every job I've ever had I was an airline pilot, and I've been in real estate investing. So I've never been stuck in an office, and I think I just go nuts.
Listen, I was for 15 years and it's not fun. But what's funny is people that I worked with, and even me, we would all lie to ourselves and we would say, man, I love my job.
Mm,
And in hindsight, anybody who says I love my job, you need to ask them, well, look, if you won the lottery, would you still go back to work because you
mhm.
love it so much? You don't love your job. It's a necessary evil, right?
Yeah,
So,
absolutely.
but yeah, like, we found our calling with real estate. There's nothing I'd rather be doing, right? I choose to do this.
Yes. And I
Yeah.
choose when I want to work.
Yeah. Well,
And
I
if I
don't.
want to
I
golf,
still work 12-hour days, but
well, I do too, but it depends on when. If I want to
yeah.
golf in the morning and then work till 10 or 11 o'clock at night, it's my choice.
Yeah. Yeah, I'm glad you brought that up. And good for you. You found your why. It's so important to
Mhm.
find your why. Michael, are you ready for the best ever lightning round?
Sure, absolutely.
All right, Michael, what's the best ever book you recently read?
The one I love is called Money Secrets of the Rich. A good friend of mine wrote it. His name's John Burley. And this is, again, when you find your why and you start making money, everyone, don't go out and spend it. Okay. Learn from people that have money and have a lot of money and find out what they're doing. They're not buying the $3,000 purses or the $200,000 cars. That really changed my life, is that the money secrets of the rich.
And back to your original point, Michael, if you found your why, those materialistic things really have
Mhm.
diminished returns on them.
They do. What you
Yeah.
find out as a real estate professional is like going, okay, how can I make, if I buy this, can I make money off of it? I mean, you turn into this crazy, can I, I'm not going to buy a house in Florida unless I can make money off it. I mean, it becomes this obsession of everything I buy, I want to make a return on it.
Yeah. And then time plays a factor in it as well. Look, it'd be great to have an RV.
Mhm.
Man, we got to store it. We got to maintain it. You got to do all this, right?
It's
You
better
know,
to rent it.
yes, yes. So great perspective. Michael, what's the best ever way you like to give back?
Great question. This one of the absolute joys of finding my why and being successful is uh, giving back. I'm on the board of directors for several charities. I'm a Rotarian, if you can believe that. I'm under 80 years old, and I'm a Rotarian. I'm just kidding. I'm actually going to be the president of our Rotary group next year, and I love it. It's the way to give back. I'm on the board of directors for I'm a veteran, so I do a lot with veteran charities. But that is almost, to me, that is better than making money. Is is, my God, a charity that we do, if a fallen veteran, and we give their children college scholarships, just looking at the spouse's face when they know that their child's college is going to be paid for. That to me is just so much more gratifying.
That is amazing. Michael, thank you for your service and thank your family for all your sacrifices as well. Finally, Michael, how can the best ever listeners reach out to you?
Yeah, website Gateway PE, as in private equity, gatewaype.com. I'm on LinkedIn under Michael Stohler, Stohler, and everyone, just let me know how you found me, and I'll answer any question you have.
Michael, thank you so much for your time today. You've given us a tremendous amount of insight, not only into hotels, but also mindset. So I got to thank you again for your time, man. We've learned a lot. I've got so many notes here. I feel like somewhat of an expert now in hotels because of you. Thank you.
Thank you, Ash.
Best ever listeners, thank you so much for joining us. If you enjoyed this episode, please leave us a 5-star review. Share this episode with someone you think can benefit from it. Also, follow, subscribe, and have a best ever day.